Here we go. First episode of the week. Hey there, I'm Mitch Goldberg. Welcome to your post-market live stream show of the stock market, personal finance, investing, and all the things that we talk about so that you could be the boss of your money. And that's the name of the show, Be the Boss of Your Money. It's the name of the game. It's very easy for your money to become the boss of you. I'd like to welcome you to today's episode. One thing that's very interesting is the backdoor Roth IRA. The backdoor Roth IRA may be saved. We're going to talk about that, go through a quick rundown. I was off the air the last couple of days, and we are back today to give you a quick rundown. The markets have been hitting record after record, so we're going to look at why and how we're climbing this wall of worry. I thought the supply chains were supposed to ruin everything, but they haven't. So let's just take a quick intro, and then we're going to get into it. Here we go. Thank you so much for joining me. My name is Mitch Goldberg. You're watching Be the Boss of Your Money. If you're just joining me now, we're talking about a quick update in the market, just put things in perspective and what's going on. We're going to talk a little bit about personal finance, in particular, the Roth IRA, and in particular, the backdoor Roth IRA. And we're going to just get into a couple of things. Plus, most importantly, I love hearing from you. So if you have any questions, hit me up in the comments. I love the opportunity to answer your questions. And words of wisdom, words of encouragement are always appreciated in the comments as well. And while you're watching this, if you would mind, give me a thumbs up, maybe a heart or a reaction button, depending on which platform that you are watching this on. And I'll see you out there, and it'll let me know that I am on the right track. Melanie is out there. Melanie, Diane Howe, thank you so much for joining me. Melanie, you know, I owe you a DM. You have to help me get this thing on a podcast. I just haven't had a chance to do it. Some crazy things have been going on, and I didn't forget you. And man, oh man, you know, when I see your name and I'm like, oh yeah, I was just about to call you. And okay, well, thank you very much for joining me, guys. I want to put things in perspective, so let's get into it. We're going to take a quick look at how the major averages did. Pop myself up in the corner. Okay, if you want to know how I'm doing this with the screens and putting myself in the corner, I'm using a Blackmagic A10 Mini. Let me make this big enough so you could see it on your small screen. Okay, Dow barely, but a new record up at 35,913. We did hit 36,000 intraday before, so that is pretty cool. I remember years ago in like the mid 90s, people were saying, you know, one day we're going to hit 50,000 on the Dow. Well, right now we're maybe 12% away from hitting 40,000 on the Dow. And then after that, it's a 25% jump, and we'll hit 50,000. 25% in a year is not exactly unheard of in a major benchmark. Okay. By the S&P is up over 20% this year. NASDAQ is up 97. That's a good day. S&P hit a new record today. Gold up a little bit. Still can't break 1,800. We talk about that all the time. I really think if gold could just stay above 1,800, that'll be your clue that inflation is really starting to take hold. And I hear what you're saying. We're going to talk, you know what, let's talk about inflation. Man, I talk about inflation till there's like, I'm just beating the dead horse with a stick here with inflation. But yeah, we have inflation. So I'm not saying gold, if gold goes up, it'll tell us we have inflation. The stock market, investors in general, are looking past this present moment of inflation. The expectation is that inflation will moderate. We might not go down to prices in late 2019, pre-pandemic, but there's a really good chance that prices will moderate, supply chains will fix themselves, and they are, and they will. Look, we are not going to be in supply chain hell forever. So the market's looking past the current bout of inflation. Never underestimate humanity's ability to mine and manufacture unlimited amounts of everything. Whenever we've needed something, whether it be silicon, lithium, or corn, or cars, we always find a way to meet demand. It might take a little while, but we'll meet demand. We'll probably have too much supply. And then we go through a deflation scare again. And then people start worrying, is it a recession again? This is all part of the cycle. This is not the first time that we've seen inflation jump up and supply chain issues. After World War II, 1947, inflation was over 20%. And supply chains were messed up because we had World War II. They got back on track. It took a little while, but they get back on track today much, much quicker. So that's one thing. Over there, we've got a comment. By the way, while you're watching this, if you have any questions, hit me up in the comments. As you know, words of wisdom, words of encouragement are always appreciated. Keith is out there. Hey, Mitch, what do you think the sweet spot for inflation would be? Let me put that up on the screen. Hey, Mitch, what do you think the sweet spot for inflation would be? I mean, not to state, like, what we already know, but the Fed says they want to see 2% inflation. What is the equilibrium? Is the equilibrium really at 4 or 5% inflation permanently, or is it something lower? It's really tough to say what the sweet spot will be that will soothe investors' nerves. But right now, when everyone's saying that inflation is going to wreck the market, wreck the bond market, and we're going to have stagflation, which is a ridiculous thought process, in my opinion, it's tough to say. I wish I could give you the real answer. I don't think investors would be happy with permanent 5% plus inflation. I think that would be really bad. And I think investors are expecting the current inflation figure numbers to come down eventually. We're going to get the employment figures this coming Friday. Okay, the October non-farm payroll figures. And we're going to be watching for how many hours per week worked and wages. And that'll give us a pretty good clue. And then that could rock markets up or down for the day. And by the end of the day, we'll already be talking about the next month's non-farm payroll figures, because every month the non-farm payroll figures is always like the most important thing, that we're going to ever see or hear or watch again for the rest of our lives until the following month. So let's get back to screen share. Okay. So the 10-year treasury at 1.557, so under 1.6. You see what I mean about inflation? If we really were hitting a sense of inflation that was going to be really sticking, the 10-year treasury would not be at 155. It would have been probably the 1.8s already. And the VIX was up slightly, still around 16. That's this figure right here. 16. So, we're below 20. Below 20, we rally. Above 20, we sink. And that's just a continuous pattern. Let's take a look at the Russell 2000, which was the standout of the day. This benchmark was up 2.65%. You see that? Up 2.65%, 2.65%, compared to the S&P was up 0.6. So standout day for the Russell 2000. Now, do you know what? Wrong screen. Do you know what the Russell 2000 stands for? What that means? It's the small cap benchmark. It's your main small cap stock benchmark, like the S&P 500 is your main large cap stock index. Russell 2000 is small cap, and small cap stocks are much more sensitive to the economy. They when the small cap stocks rally, it's indicative that investors believe that the economy is strengthening, that there's a real rally in the economy. What I think the Russell 2000 rally today, and any benchmark up over 2% has got to catch your attention. Certainly gets my attention. I think what it means, what I'm going by, is this: COVID cases are plunging, and we're starting to feel like we are past the surge. We have so many Americans vaccinated and so many people who've already had COVID. By the way, the FDA, or is it the CDC, came out with a report and said catching COVID, having had COVID, does not give you nearly the amount of immunization protection that the vaccinations, that the jabs would give you. Just want to pass that along. I know a lot of people are going to be like, no, I don't believe it. All right, I'm just telling you what the scientists are saying, believe it or not. But anyway, COVID cases are plunging and the economy globally is starting to get back on track. And it's really starting to, I think you're going to see some acceleration. I know people are talking about China plunging, and US GDP was really awful, about 2% last quarter. But that is because, not last quarter, the quarter, second quarter, but that is because of the Delta variant. And as we get through that, you're starting to see economic indicators. I think you'll start to see them turn up. But that's why the small cap stocks went up. Okay, I'm getting a little wordy here. Filippo is out there. Filippo watching from LinkedIn today. Thank you very much, Filippo. Hey, Filippo, you know what I want to ask you? And if you want, I could send you a DM if you want to come on. Could you explain to us, like, what's the difference between Bitcoin and Bitcoin Cash? Like, I'm a little foggy on that, a little fuzzy, and I feel like I consider myself an expert in this stuff, and then I'm something as simple as that. So if you want to jump on, just give me a yes in the comments, and I'll send you a DM on LinkedIn with the link to join the live stream, and you could tell me the difference between all these Bitcoin this, Bitcoin that, Bitcoin Cash that I'm looking at every day. I just look at price of Bitcoin. Okay. So let me know if you want to do that, Filippo. I know you know your stuff. All right. So let's go on back to screen share. I want to talk to you about the backdoor Roth IRA. Here's the thing. If you make over $140,000, you can't put money into a Roth IRA. All right. Wait, hold on. Oh, newsflash. Bitcoin Cash is created as a fork off of Bitcoin, and the reason for it was to speed up their transactions. We can talk about it. Let me know if you want to jump on the live stream right now, and I'll get you the invite. All right. I'll copy the clipboard. Okay. And I'll send it to you in a LinkedIn DM. Here, I'll send it to you now. If you jump in, you jump in. Just bear with me, folks. I don't do this often, but I'm going to just see if I could pop a message here. Let's pop one off to Repo. Paste. All right. I just DM'd you a link in mail. Okay. So tell me if you want to jump on here and talk to me about some of this stuff. But the backdoor Roth IRA, it's a strategy that we use to bulk up your tax-free retirement. And it means if you're already participating in your company's 401k plan, or you make above a certain threshold of $140,000 a year, you cannot contribute money to a Roth IRA. And a Roth IRA is great because the money in it grows tax-free, not tax deferred, but actually tax-free, meaning an IRA, traditional IRA, the money grows tax deferred because you're deferring paying taxes on that money that's growing in your IRA until the day you actually take money out. So if you take an IRA distribution, it's taxable. With a Roth IRA, it's never taxable. So therefore, the money grows tax-free. And when you take the money out, it's again tax-free. Okay. Okay. So Filippo says, "Would love to. No camera today. Let's set up a dedicated time in the future." All right, you got it. I'm looking forward to that. By the way, Filippo is also a consultant in teaching people about Bitcoin. So if you don't know Filippo and you're watching this on LinkedIn or anywhere, Facebook, what have you, send a connection to Filippo. He's super into this. He's been a guest on my live stream before, talking all things crypto, and it was a lot of fun and very educational. So anyway, in the Biden package, the social package, whatever you want to call it, was the backdoor Roth IRA is going to be eliminated as a tax loophole. But now, just going through the latest article, all right, it was not actually eliminated in the final language in the bill. Okay, so we still might have this, and that means you could take money, you could put money into a traditional IRA, not a tax deductible IRA, just an IRA. It's a non-tax deductible traditional IRA because you're not going to take a tax deduction on that money. And you take that money and you convert it into a Roth IRA. There's no income limit to do a Roth conversion. And in this case, there's no taxable consequences because you didn't get a tax break on the money that you put into the traditional IRA. So therefore, when you flip it into the Roth IRA, there's no taxes on the Roth conversion. So that looks like it's back on the table. And that's a really important piece of personal finance that a lot of people need to know. It's not positive yet. I mean, there's still some wrangling going on. But right now, I think a lot of people have been talking about this and a lot has been written about the elimination of the backdoor Roth IRA. And all of a sudden, here we are. I can't believe it. Like we're talking about this again. Okay, let's take a look back on the screen. Look at some of the ETFs we've been covering here. ProShares, the Bitcoin Strategy ETF. We've talked about this a lot. This should really be called the Bitcoin Futures ETF because it doesn't actually invest in Bitcoin. It invests in futures. It was up to 43.95. It's 39. So, most people who have gotten into this trade are losing. And then the Defiance Next Gen SPAC derived ETF. They should just call it a SPAC ETF, but SPAK, that's this one that I'm highlighting over here. All right. And this was as low as 21, as high as 35. It's 24.92. I think the DWAC, the DWAC, that was down 10%. The DWAC is the Digital World Acquisition Corp. This is the SPAC that's doing a reverse merger with former President Trump's social media company. I think it's called Truth Media. I forget exactly the name, but this went from like $10 to 175 and now down to 60, down another 10% today. But I think that reinvigorated some people's appetite for SPACs because the SPACs usually come out at $10 a share, special purpose acquisition company. And it's just a company that raises money, but there's no underlying business in the company. The only thing that the company has is their word that they're going to find a private company to merge with within 2 years. If they don't do it within 2 years, and the money that they raised in their IPO has to be given back to investors. And by the way, nobody who raises money in a SPAC actually wants to give the money back to investors. So they'll basically go into any deal, no matter how speculative or yuck it is, within toward the end of that 2-year period. All right, let's take a look, a gander here. It's not the screen. This is the screen. Okay. Let's take a look at the FANG names. Apple was off a drop. No big deal. But, 157 to 148, it's not nothing. You see that little red mark there? That's its distance from its high. Amazon is actually almost in the midpoint of its high and low. I don't think people realize how much Amazon has come off to be in the midpoint of its high and low. Facebook is near the middle. Google's toward the top, Microsoft toward the top, NVIDIA, new record. So that continues to hold up well. But it's actually good to see other stocks besides FANG stocks lead the market higher. And just to give you an example, let's take a look at Ford. I had another one in mind, Costco. The stocks like Ford. I mean, Ford, I don't know if you could see this, but Ford was up over 5% today, up almost $1. So the stock hit a new 52-week high today. Costco hit a new 52-week high today. So there are plenty of stocks giving this market lift besides just tech stocks. As a matter of fact, tech stocks were not even, the record holders for the day. All right, so let's take a look at what really worked. My watch list. sector ETFs. I look at this every day, the sector ETFs, just to give you a quick bird's eye view of what's working, what's not. But consumer discretionary stocks are the leaders of the day. Then energy's having a good run. You see this line, the green over here, and the red is how far it's come off from its high. These are the exchange traded funds that represent the 11 major sectors of the U.S. economy. So utilities have really backed off a good amount. Industrials just a little bit. Real estate just a little bit. Communications coming off. Consumer staples coming off. Consumer staples are backing off just a little bit, but I think that's more of a function that we're in a reopening economy and there's less demand for stocks like Clorox and Procter & Gamble and Mondelez. The kind of stocks that you consider consumer staples. Financials are toward their top. Technology, even though it's off today, it's still right near its top. So nothing's cheap in this world, but there are stocks that are finding their way. If you take a look at just one more, let's take a look at another stock two more stocks we've highlighted here. GM and GE, the two generals. GM was up 2% today. GE was up 1.3% today. So these stocks are getting some lift, and it does look like there are other pockets of value, which is kind of cool because usually at the end of the year, stocks that are winners stay as winners and stocks that were losers stay as losers. But people are in the hunt for some value, and I think they see it in GM and GE. Both of these are also considered ESG plays, which are like a super hot thing. So that's the story for today. It's going to be a quick show. I really appreciate you joining me. If you think of anything else, any of the questions you may have, let me know. The big things going on this week, of course, is the Fed meeting. The Federal Open Market Committee, aka the Federal Reserve meeting, is Tuesday and Wednesday. And Wednesday, after around 2:15 or so, after the meeting ends, we should find out exactly what the Fed's plans are to taper. Okay, the Fed is expected to taper its bond purchases, and they're looking to be done with that, from what we understand in the market, by the middle of 2022. So through June, you've got 8 months. So you take 120 billion divided by 8, and that's about how much the Federal Reserve is going to taper their bond purchases every month. So we'll find out more about that. And then they said, of course, that their threshold to raise interest rates is going to be even a lot higher than that. So let's get back to you. Do you have any questions, guys? If not, I'm just going to cue the music. And we will thank you so much for watching. And I hope you have a great night. I'll be back tomorrow, and we're going to be talking a lot more finance. It's going to be a good show tomorrow. Take care.